Down. Today we're gonna be speaking. This is Leo from Bit the Market, and today we're gonna be speaking about the stock market in general. So when we speak about the stock market, the main focus is the SP500 or the Emini, or if you are trading the futures. Okay, ES. I'm using this chart because it's more precise. Okay, so why I still think I'm still holding my bias. I still think we're gonna go a little bit higher, maybe here. Like nothing changed from the last video. Okay, I'm still holding. I did a video when the Emini was around here, and now the probability seems interesting that we're gonna go higher, and then I expect the second leg of this leg. Okay, it can be here. We can run a little bit higher. We can maybe higher, and then we can lower. Okay, so however, I'm still. This is like a target for me. This is like a magnet for the price, and at some point we have to reach there. All right. Why? This is a deviation from this law, and you can argue two things. So maybe this is the high of the range, or this is the high of the range. If this is the high of the range, we are around that level. We touch this here. Okay. So many traders. This is very interesting. This high. So if this is the range, many traders sold the high of the range, expecting maybe we're going to be a little bit lower. And a lot of traders bought here. Let me zoom in. Okay, this is the daily chart. I'm speaking about this before this inflation data tomorrow. So what kind of setups we should expect? And I think I'm not gonna I'm not gonna be buying or shorting, honestly. It's just one of my rules. If it's about inflation data or no farm payroll of any opportunity of big data coming out, I just I prefer to stay away from the markets because you can have anything. You cannot predict it, okay? No fucking hell. You cannot predict it. And be honest with yourself. Anyways, since we are back to the mid of the range, and I want to speak about something here. What is happening here? So the market is getting squeezed, and when the market is getting squeezed, I'm more likely to get into a breakout mood. And traders know that. Okay, they know this is a trading range price action. Why? Because whenever you see it's so bullish, it gets sold off. Whenever it's so bearish, it gets both up. Okay, but what happened exactly? So this leg, many traders sold, expected a second leg. And this leg, this is the second leg of this leg. So sometimes second legs come late after making a new high, come expecting a higher low. So a lot of the second legs can come like, okay, if you measure this leg, it is the same as this leg almost. It doesn't have to be precisely that, okay? This is not a direct science. This is not one plus one equals two. But this leg, this is the second one of this one. So when that happens, the market enters. Okay, we give bears whenever you have such a sharp sell-off, expect a second leg. Why? So if I see this and I am a trader, I don't fucking care. I will sell the market everywhere. I'm gonna sell here, I sell this bar, expecting lower prices. But since the market reversed higher, they are really, really, really sharp traders. Since they still expect the second leg to happen, they use that to get out at break even. So when the market came back here, everyone who sold here, and those are the last bears. This I call them the last close bar before reversing up. Since the market just give this chance to these bears to get out at break even, they got out. And the market, when you get break even, the bears to get them out at the break even, there's two options. So there's only one option. Sorry, there's only one option. Bears are buying back their shorts, okay, which means the market is gonna go higher. But look closely where we are back. So let's say you're a bull, you see this, and you say, okay, if I see this, I'm gonna expect a second leg higher. And it's reasonable. Okay, if you have a large margin, you can trade like that in trading ranges. But the best way traders can do is buy low, sell high. So is this is the high of the range, or can we go higher? Can the leg go high? It can happen. Okay, can we go like a measured move based on this leg? Maybe the second leg is gonna be higher. Everything can happen. Okay, but we are speaking probabilities right now. So the market is back where a lot of bulls both here expecting a breakout. Okay, so this is, for example, this is a good looking bar. Okay, we took the low and then it looks like we were hitting higher, but the market reversed on them. So all of these traders who bought this bar had the chance to get out of break even once the market came back here. So now the market is deciding. What is deciding? We Most of the traders know the market probably is gonna hit higher. Why? High, lower, high. That's like a triangle formation. And whenever you have it, we can actually, are we gonna have one then before we break? Or that's what most of the market is trying to decide right now. So let's say you see this and you start selling above bars, you sell here with limit order, and you see this breakout. And you see you are a bear, okay? And then you see this. A lot of bears, when they see like a red bar, they sell below it or they sell it and they scale in on their losses, hoping to get out as break even. So if and with a profit on this position, that's the nature of trading ranges. In trading ranges, both traders make money, bulls and bears. Remember that. Since the contract is still a trading range, so I'm not speaking about this pair. I don't know the inflation data how it's gonna come, okay? But right now we're above the monthly open. That's bad for the bears. Why? Because that's mean this can be an extension of the monthly bar. But if we come lower, where can we come? Okay, first we maybe can come to the big round number, which is the 4,000. And here there are three types of bears, as there are three types of bulls as well. They are sell the close, they are sell with a stop order below the signal bar, and they are a limit orders peers. Okay, let me explain. So if you are a bear, you see this bar or this bar, you sell the close, expecting okay leg, another leg lower, and then you see this breakout. A lot of bears go out very quick above this because they are trapped. That's why you see breakouts like this without overlapping. So that's a gap. You see this? If you use another chart, you're going to see gaps here. And whenever you have like gaps open, that means a lot of trapped bears are there. A lot of trapped traders are there. And there are two trapped. There are the bulls trapped from a good winning trade, and there's the bears also trapped for in a bad trade. So first, maybe we're gonna come to the market. Maybe is gonna decide to come and check these bears as break even. So maybe this is a level. Those are limit order. Okay, that's maybe if the market decides to come there, that's a good place to study longing. And there are also the sell the close. So even this is a bull bar. There are a lot of bears who sold the close and made profit. Some of them held the trade hoping for a leg lower, and those also trapped here. So sometimes the market decides to come there as well. And then sometimes the market decides to come back to the last close bar. So this, okay? So once the bar opens, they sell the market, okay? Before, once the market opens the day, they sell the market, they made a little bit profit, but they reverse it on them. But then, so which makes this Are we gonna come back? So this is all of this is a buy zone. Is that clear? I hope so. I'm speaking with myself. I mean, there is no one can answer right now. But let me know in the comment section if this is clear. Which makes this a buy zone. That's why when you hear broken support becomes a resistance and all RS levels, you see, this is why they work. It's not because it's just like that. Okay, so are we gonna give these beers we know they are trapped beers the chance to go out here before going higher, or are we just gonna go from high one and high one are high probabilistic in in strong trends, and this is strong enough to maybe go a little bit higher, and maybe gonna have the second leg. So this is first leg, maybe gonna have a second leg. But if I have to guess, okay, from my experience, I think we're gonna have sideways for maybe 1 week or 2 weeks, okay, and then maybe we're gonna decide are we gonna give this chance for these bears to break out to get out to break even or not, because if not, this is gonna really expand higher, and then they will have to hold their position, sell more higher, and then maybe we're gonna come lower. Is that clear? And nothing changed for me. This is still playing the probabilities, and if I want to buy, I don't think this is good. This is a good signal bar. It's like, okay, we have like some kind of micro double bottom here. That's a good signal bar. Maybe we can go for a measured move based on this bar. But would I buy there? No, thank you. Why? Because there are, as I said, there are a lot of trapped bulls here. So they just want to go out from a bad trade. Because imagine you're holding all of this and the market comes back to your level. So it's better to get the hell out from your trade. Another, okay, let's say if we decide to go a little bit higher, just one deviation based on this high. So maybe we're going to do a double tap, maybe come a little bit lower. So those are the things I watch for, okay? And it's problematic, okay? Because now we are at resistance. Meanwhile, the bulls want to break out. They are trying. So this is really strong bull. And the market came all the way down and came and closed up above this bar. That tells you the market is really strong. Surprisingly enough, today I was watching the dollar. The dollar is going higher, and the SP500 is going out. Dow is going higher. Nasdaq is weak. So it's all a mess, honestly, right now. It's better to stay careful. And uh, whenever it's a mess, and I trade my system, this is my trade, I lose. I lose money. I lost the last week. I'm okay. Like we're sharing everything with you guys. Like I really don't. I don't think of trading as like a okay. You're gonna just get rich very quick about it. This is I trade this as a business. As long as I manage my trades, I'm okay with it. I lost like around 2% to maybe 2% and a half on my account, and my account is large. That's large, okay, and it happens. I mean, you play your system, you play your setups, and you try to get your probabilities, and that's what I do. I mean, no one expected this, okay? You really cannot expect this breakout. And now, since it's a earning week, that's why there's a lot of buying pressure on the Dow more. Dow is so strong because it's industrial, and there are a lot of companies are reporting their profits or earnings season. And whenever there is an earnings season, you get the market to get strength with it. But if inflation comes back very high tomorrow, I expect really maybe we're gonna try to get higher and then sharp drop. Okay, I hope that's clear. At least a leg like this one at some point. All right. Let's or maybe this is the second leg. One, we came high, and this is maybe the second leg. Maybe the second leg already happened. So this is maybe a two-legged pullback, and we can just rip higher if inflation is good, is lower. Okay, let's see what comes up tomorrow. I shared this because I think it's problematic. It's better to stay away. And if you are trading, better really tighten your stop. You don't want to be holding for too long, specifically around resistance. If you are playing a breakout, your stop just needs to be below this. If you go out, it's good to go out. And that's it. And I have my phone calling, so I'm gonna call it. Yeah, and if you go back to weekly, I'm still holding my buys. Okay, I still think we're gonna go a little bit more higher, and then the second leg is gonna happen. The problem is how the second leg is gonna come. Okay, I'm I'm just making a forecast. Is gonna come like this way. It doesn't have to be that way. It can maybe come a little bit higher, and then you have the second leg. It can really come higher here, and yeah, then you're gonna have a second leg. It's the same way this way. This is a strong leg that you would expect a second leg. Look where we came. We came above this high, and then we had the second leg. I want you to look at that as this leg. This is a large leg that you would expect another leg. So we can actually come here, come lower, maybe come a little bit higher, come lower, maybe come to the high, come lower. But maybe make just a new high and foaming everyone out and then make another leg. No one knows, okay? And that's how we view the market. But let's see how it's gonna go. Remember, this is my good buy zone, and let's see how it's gonna work. And that's it, folk. See you with another market breakdown.